This is Larry Shover, CIO of Efficient Advisors from the CME Group in Chicago. Well, the last 6 weeks has been a real relief rally in the S&P 500, seeing the market rally over 5%. Many of us are scratching our heads on why, and there could be a lot of reasons. One reason could be that the market just oversold itself. People got ahead, people panicked, and something I stress all the time about keeping a diversified portfolio and not panicking. One fun fact, going back to 1920, we're in the midst of earnings season, and whenever we see a multiple depreciation of more than 20%, like we saw in December, 15 out of 20 of those episodes have followed with a 12% gain in the stock market over the next 12 months. Not to say it's going to happen this time, but that's the historical lesson for it right now. Currently, we're in the crux, the apex of the earnings season, and by and large, the earnings season has done well. We've had, at the end of this week, we'll have up to 40% reported in the S&P 500. So far, 75% are beating on the earnings side, and 60% are beating on the revenue side. It is true that the bar was set a little bit lower, given earnings estimations have come down since last December from $178 to $172 or $73. But at this point, investors can look at this and say, if we see $173, then for the first time in a while, investors are actually being paid to take risk at a 15.5 times valuation, as opposed to something that's much higher. So again, going forward, we have to get through earnings season. We need to get consumer sentiment back on track, and also housing data, which continues to disappoint. Seems like the FOMC is helping with the interest rates and helping the financial conditions loosen up ever so slightly, and perhaps that will help the stock market for the rest of 2019. I'm Larry Shover, CIO of Efficient Advisors from the CME Group in Chicago.
Check out businessfirstam.com to find out where to see our entire show. And don't forget to like, follow, and share Business First AM.